Hi, it's Michael Farr from Farr, Miller, and Washington. Thanks for joining us again. It's been a tough day for the markets, and it looks like it may have been another tough day for America. We're just getting news of the San Bernardino shootings, where they say as many as 3 gunmen wearing masks and vests having long rifles have shot at least 20 people, and apparently 3 people are dead. It's hard to live in an America where things like that are becoming to be accepted, as horrible as they are. When we look at markets, it's on that subject a little more discouraging to me. The Monday after the weekend Paris shootings, that Monday following those Paris shootings, the stock market rallied 240 points. I worry when investors begin to become calloused and take these sort of atrocities as commonplace. Our thoughts and prayers go to those people and families in California. As I look at markets, I was at a luncheon today at the Economic Club of Washington, of which I'm a member, with Janet Yellen. She gave a great speech, a long speech, a detailed speech that in many ways, as she talked about the economy and the upcoming meeting of the Federal Reserve's Open Market Committee, it was an on the one hand and on the other hand speech. It sure sounded like the Fed is intent upon raising rates at this next meeting. But as any good Fed chairman will do, she left herself enough of an out, referred a bunch to data dependency, and suggested that things might change. Curiously, after that luncheon ended and as we were leaving, the Fed's beige book numbers were released. Those numbers weren't good. Stocks traded off about 130 points on the Dow Jones. So as they traded off further as the San Bernardino news came out, it was on the heels still of that beige book data. Stocks closed down about 160 points. The S&P 500 closed down 23 at 20.80. The dollar at $1.06 to the euro. $1 to buy a euro now costs $1.06. That's a low. Those euros historically are pretty cheap. Oil, $40 a barrel, 40.17, and the yield on the 10-year Treasury a little bit higher today at 2.17%. We wrote this week about the consumer and about the consumer's power to continue to drive the economy. And while indeed more people are employed and they are earning more money because they have some more jobs and things are improving, gas prices are low, energy prices are low, the savings rate is increasing, which means that the consumer isn't spending the extra money that they're getting. They're actually saving it. Longer term, that's a really good sign. Shorter term, it doesn't help the economy much, and it says that consumers voting with their wallets are not that confident. I hope you'll read that piece, and please let me know if you have any questions or comments. I love the emails we get back from you all, and I thank you for them. As we look ahead to the Fed meeting, I do expect them to raise, unless there's more news that comes out that's going to take away from it. But I would expect them to raise at this point. I think that the economic growth still looks like it might be on target for that 2% range for 2016. And therefore, I would not swing for the fences. I'd keep my expectations in check, and I would make sure that the companies I own are really earning money and have solid balance sheets. A little dividend never offends. If we can help you with your investing, please give us a call at Farr, Miller, and Washington. On a tough day for markets and a tougher day in America, thanks for watching. In Washington, D.C., I'm Michael Farr.